Winter is coming is the theme of this Sunday report. There's been lots of extreme estimates for bearishness or bullishness. Right now, we seem to be in a chop zone, but there's lots of news to also decompose in this current market environment. So let's go ahead and see if we can provide some more clarity in this Sunday report. We're going to break the technicals down in just a moment, but one of the things I want to talk about before that is what's going on with the US dollar. The US dollar is kind of having to pull back from those 110 highs. If you actually inverse DXY over SPY, we can see the correlation with the daily movement in SPY is really tight with DXY. Remember, DXY is our US dollar futures. And we can also see from the global news that can also be drawn as the fundamental analysis for what's moving this, that there's a lot going on. Some of the European countries are actually pivoting right now, trying to correct their energy policies so that the winter isn't as bad as we anticipate. And the emphasis there should be on some. Now, Germany is likely going to continue down a path of disaster. It's going to be an absolute mess. Russia shut down the gas pipeline altogether, said that they would reopen it if they were provided a new turbine from the UN. Will they do that? Will the EU step up and give them a turbine? We don't know. But as of now, there's this complete uncertainty on how much will be provided. Now remember, this is 40%, and for Germany in particular, of their energy to have that natural gas cut off. This is a huge loss. This is not something that can just be supplemented with oil, especially in such a short time frame. And they've done nothing at all to offset this. You know, they didn't want to take control of nuclear energy. They didn't want to develop any sort of independence on energy. We've seen other European countries, same thing. They're all dealing with this massive issue, and they don't have enough time to supplement those supplies that they're going to need. Now, we've also at the same time, though, seen estimates that this could be an unusually warm winter, which would be really good for these countries. And at the end of the day, though, not enough people are talking about the food side of this rather than the energy side of this. Now, they've been calling it food insecurity, which is the new definition of famine. But nonetheless, I do expect a lot of starvation to be occurring, maybe not so much in the EU as much as emerging markets, but this will also play a big role in maybe a new rebound in inflation. And the market's trying to take all this data and all this information, you know, rip the Queen Elizabeth as well, by the way. But it's a lot to process, which is why we could see a big chop zone come in for the market, especially here in the US. Now remember, as those global currencies and markets start to topple, a lot of money could flow into the US for safety, but that safety might not be very stable as we see that the US is also taking on policies that are leading to the same issues that Europe has now encountered. And keep in mind, the US is still doing monetary tightening. So we're still raising our interest rates. We're going to do quantitative tightening soon. We're in a rough month right now, historically rough month, and a historically rough month next month. But remember, we still have elections coming up. And as you can see, it's just piling on top of each other, right? Uncertainty on top of uncertainty on top of uncertainty. And some of these aren't even playing out in ways that people expected. We expect that after Russia closed down the pipeline to Germany, that there should be a spike in UNG, and there wasn't, which means that maybe this market has priced most of this in, or maybe it's underestimating how severe it will be, or that they're hoping for some resolution with Russia-Ukraine, and a lot of those can be reestablished. A lot of that, all of it, is just speculation though. So let's go ahead and tune into the charts and see what it's telling us there. Okay, be honest with me here. When's the last time you actually planned out your spending, your finances, or planned for your retirement, or how to preserve the wealth you already have? Listen, you need to call Rob Reed. There's no one better. Learn about different investment strategies to help you create or preserve your wealth. It's for your success. You know you need to get it done. I know you've been pushing it off. But honestly, learning about index-based life insurance, which is basically like a rich man's Roth IRA and allows me to be my own bank, was huge. So if you want to learn more, call the number above or visit cwrpcg.com. So the first thing I see right here, let's just ignore these lines for a moment. We're on a 1 hour graph, right? If I get out a pencil here, we can see a shoulder, a head, and another shoulder developing. So the inverse head and shoulders right here. indicating that this is likely going to come up. And you could further develop that bullishness if you come back to a shorter time frame. As you can see on the 1 hour, this is a very overbought RSI right now, indicating that this could have a short-term pullback before we see the real breakout on this inverse head and shoulders. On the 5-minute here, we can see that, the RSI is just crossing over to 50, and it looks like the TTM squeeze also wants to roll up, indicating that we could get some bullish momentum here. Important to remember that also 2 weeks ago, we had a bunch of put buying. So I wouldn't be surprised to see a lot of short covering from that, giving this, some more momentum to the upside. Now, don't be too quick to ignore these overbought levels in the 1 hour though. I would expect this week to see at least one day where we have a pretty big pullback and these RSIs balance out across the time frames. And I do also want to call back to last week where we talked about there could be potential for a big drawdown if we break that double bottom. We tried to, there was no momentum behind that though. I even called it out on the Discord. Likely not going to see downside there and instead going to get this bounce. However, the bounce was over the range that I expected. So we've got new ranges set here. I'm expecting this new range to be about from the 420. We can see a pivotal level here and about 380 pivotal level here for the week. Now remember last week we also talked about much more longer time frame horizon, and even in this video we talked about that. But for the week, what I'm expecting is a chop to stay within this range, one big down day potential, and overall we could see some more bullish momentum building. Important to note that the SPY right now is also leading into more bullishness than both IWM, QQQ, or the Russell 2000. So if you looked at those, if we pulled those up, you would not see as much bullishness as you see here on the SPY, which means that they could have to play some catch up, or SPY could have a fake out day and then we'll build up that bullish momentum. I really quickly want to cover this report as well from Goldman Sachs. This is about their algorithms. If you're confused about reading this 2SD means the standard deviation. So they're saying, hey, in a flat market, they want to sell. In an up market, they want to chase and buy. In a down market, they want to sell as well. 2SD, so remember, most algorithms are momentum based, so you need a significant move for this to take place. You need a significant move for the downside for this to take place. I don't really want to talk about that too much. The one thing I want to focus on from this report is the monthly model. Up to standard deviation move over the next 1 month, we model 161.3 billion to buy globally. And remember, these are globally, right? Last week we had a report that said lots of selling, market ended up going up. It's important to remember that this is a global indicator. And these algorithms also, remember, are automatic. So if we see that move up, regardless of what else is going on, the algos are just going to buy. So that'll be interesting to keep an eye on. It really aligns with the thought process of, well, a lot of people probably want to load in October so they can snag positions before the election. Remember, for the election, when it comes to those, there's a gridlock in the government, meaning that there's a huge red wave, and then we get more of a balance between Republicans and Democrats, which makes it harder for them to pass new policies or get things done. Markets tend to favor that. They like it when the government can't do much in action on that side. So that's something to also keep in mind. That's the one thing I kind of want to point out there. So let's also take a moment to talk about oil and energy. Energy's been a great performer in the portfolio. It's kind of why we've been doing well this year. So it's important to talk about this. There's a larger conversation we had here that I'm not going to have right now. We're just going to talk about some short-term technicals. But in a future video, be on the lookout for that because we'll definitely talk about it. We broke this short-term support. We saw lots of capitulation here in reaction to that. However, I took this as a buying opportunity in the short term. If we look on the daily, we could see we held some major support here. That double bottom there, to me, looks like a good indication to catch a small bounce. As this climbs higher, I'm going to continue to move up my stop loss, though, because I am concerned about further capitulation due to the recession narrative that is currently circulating, causing demand to fall off. This doesn't change, however, the huge supply constraints, although that will also involve a longer conversation that we're not going to have today. But make sure you follow and subscribe so that you can catch it in the future. And I just really quick want to touch on DXY, which is US dollar futures. We're seeing it pull back right now. If I pull up a shorter term graph, you can see that here, the pullback that's playing out. On the longer time frame, though, on the 1 day, I think this is bound for 112. Probably see that play out in the next few weeks. I do want to also say, and I might be a bit early to say this, but I think the Fed is bound to step in and try and to control the optics of this a little bit as well, like they're doing with oil. I think they'll try and bring the dollar down in some way, shape, or form. However, I do think any major pullbacks on the US dollar is a good time to get in for bullishness. Now, if you don't trade futures, not a DXY trader, you don't like this, UUP is going to be what you're going to want to look at. This is USD index bullish ETF. So if you're looking to play that or you want to watch that, UUP, DXY are going to be what you want to watch. And that's what's on my mind for, Forex market. So let's talk about the economic news this week. Not a lot going on Monday. On Tuesday, we had the year-over-year inflation. I'm more focused on the month-over-month and the CPI. Keep in mind, this comes out before the market opens. Same thing with Wednesday. PPI will be your big one, again, before the market opens. So we'll know what the market thinks before trading becomes active. Thursday, retail sales. This is going to be interesting. If in the past, we've talked about, hey, a lot of these companies have over-ordered during the huge credit boom where, all the stimulus is coming out. So then they're, loading up on goods. And then when there's all this fear in the headlines, they pull back on their spending and these companies are left sitting on those huge inventories. So we could see some ridiculous sales on the upside. If you were, looking for some, cool bundles or good discounted prices on some things you're wanting to buy, likely to see that this holiday season. But the retailers overall are concerned about the profits they'll be able to push this holiday season. We've seen some bearish headlines about that I think are likely to continue. However, for the average consumer, this leads to a big discount. So if you do have extra money to spend on goods, then you're going to probably have a good holiday. Coming into Friday, consumer sentiment. This has been surprising to the upside. We'll see if it continues to hold. And remember, this is a very, reactive number, but does become self-fulfilling. So, if this starts to turn over, market likely to turn over, economy likely to continue to turn over. But we did see a pivot on the last number. So we'll see how September looks at the moment. And that's about it for the economic news. And that's going to be it for this Sunday report. All across the socials, we've actually garnished over 500,000 views over the last 60 days. It's pretty wild when you think about it. So I appreciate all of you watching this content. Hopefully more of that will come over to the YouTube eventually. But for now, I'm really happy with the community that we have. If you want to join that community, make sure to click the Discord link down below. And there we'll answer any other questions that you have. And you can get even more details and keep up with the news in there as well. Anyways, that's it. And I'll see you next week.